Let's have a look at those markets now. Yesterday, the JSE gave up a little bit, about 0.2, 0.3%. Let's go straight into some results, actually, before we go to the markets. Peter Cooper is the CEO of RMI Holdings. He's in the Power Lunch Johannesburg studio. It says here that Rand Merchant Insurance Holdings owns strategic investments in some of SA's premier insurance brands. Not a bad portfolio to have, Peter. Discovery, MMI, Outsurance and RMBSI. Your normalised earnings up 7%. Your ordinary dividend up 19%. Quite volatile, though, because of things like weather. Can you describe your period for us?
Well, I think it's really a year of two periods. The first 6 months we had, particularly at Outsurance, approximately 300 million rands worth of catastrophe weather losses in Gauteng and in Australia. Our share of that was only about 100 million rand. And in addition, Outsurance was still building the UE business, which in the second half of the year turned profitable for the first time in the 5 years. So we've now achieved sufficient scale there. But prospects moving forward is really the exciting part of this year's reporting.
Yes, indeed. If you look at your portfolio again, it's Discovery in terms of normalised earnings up 21%, MMI up 9%, -2 for Outsurance and -2 for RMBSI. If you could rejig your portfolio for exposure to one particular sector, one particular part of the market, would you do so, and could you do it?
Jigging the portfolio is a debate that comes up every now and then, but the real attraction of the portfolio is that they're complementary to a certain extent. I mean, each of them are very well respected businesses in their own right in South Africa, and in Discovery's case growing very strongly offshore. So what they add to each other and what we extract from the centre in having that stabilised portfolio, even though you say it was slightly volatile, is really the attraction. I mean, we can use those assets to gear if we want to acquire another asset or to provide additional capital for the businesses, as we did for Outsurance when we went into Australia. But there's very little that we would really try and do with the portfolio other than maybe potentially add a fourth leg of new growing businesses to it. But it's a very nice portfolio as it stands at the moment.
Yes, it is. Let's talk about the acquisition policy of the company and also the potential. Is there potential out there? Are there things that get put on your desk periodically, and are they worthwhile?
Look, you have to accept, if we look at the people that sit on the board with us, we're busy the whole time looking at opportunities. There's nothing specific that we're looking at the moment. We would explore additional acquisitions in South Africa if it was sensible. But given our heritage, we tend to be somewhat loath to make acquisitions where there's large goodwill values involved. It's a trend that sits in the whole group where we would say we would like to have greenfields growth, or where the acquisition is made like Discovery did in the UK 2 years ago. It has to have real value for us going forward. So nothing at the moment, but we constantly stir the pot to see what's available and what we could look at.
And some of the things within your portfolio have been stirring the pot over the last few years in the industry. I mean, it's a very competitive industry, but if you look at particularly Discovery and particularly Outsurance, they are very much pioneers and presumably will continue to be so.
Indeed. I mean, in the case of Discovery, they have a policy that's just about stated of saying they want to invest at least 10% of their earnings every year in new initiatives. In their case, beginning to pay off Discovery Insure in South Africa, which is growing its market share quite significantly. The initiative in Asia with AIA is one that will be very attractive as we go forward. And then the success that they've had in the last year with PruHealth and PruProtect must be proof that program of building out the business systematically step by step is really the worthwhile thing that you want to do. Outsurance in Australia is doing very well. We're very excited about the prospects of their initiative in South Africa in building their direct life business. That's also going very well.
Your outlook statement says the following, Peter. I'll read it to you verbatim. It says, the difficult economic environment is expected to continue in the current financial year. Growth in insurance new business volumes will remain largely dependent upon the economic environment, including a recovery in employment and stronger disposable income levels. Notwithstanding these challenges, you say, RMI expects to produce good organic growth during the coming year in particular. I think there's two stories here. There's the South Africa economy being under pressure, and then maybe geographies, for example, that Discovery are in, actually moving forward.
Indeed. I mean, the South African one, we've gained market share or new customers in a slow-growing economy, by being more innovative and offering better value or more suitable products to the South African client base, be it in discovery or at the bottom end of MMI market segment or in outsurance. Moving offshore, it's new markets and it takes time to build those, but we now have 2 examples where we've done so very successfully. So we're very excited both about the South African market and our innovation in it and our ability to grow the businesses offshore.
Well done, Peter. Thanks very much for your brief time this lunchtime. That's Peter Cooper, who's the CEO of RMI.